History is often taught as a series of dramatic explosions and violent endings. We are conditioned to believe that empires end with a bang. We imagine barbarians storming through the gates of Rome, bombs falling relentlessly on Berlin, or the guillotine dropping with finality in revolutionary Paris. We've been taught to expect that the end of a superpower is always a loud, violent, an obvious event that happens on a specific day in a specific year, marked clearly in history books. But this theatrical version of history is fundamentally a lie. It is a narrative designed to keep you watching the horizon for an army that will never arrive, while you completely ignore the termites eating away at the floorboards beneath your feet. The truth is that most empires throughout history do not die by murder, they die by suicide. And more specifically, they die because their own architects deliberately decide to dismantle the building and sell off the bricks before the roof finally collapses. We are currently witnessing the final stages of the American empire unfolding before our eyes. But if you're waiting for a sudden, catastrophic crash, a single day, where the stock market goes to zero and the dollar becomes worthless overnight, you're looking for the wrong historical pattern entirely. You're looking for the Roman pattern of violent conquest and dramatic collapse. You should be looking for the Dutch pattern instead. Here at Economic Rewind, we've studied how empires really end, and the Dutch model reveals a much more subtle and terrifying process of decline. In the 18th century, the Dutch Republic was the absolute envy of the civilized world. They possessed the global reserve currency that everyone trusted and wanted to hold. They commanded the strongest navy that ruled the seven seas. They had developed the most advanced financial system that other nations tried desperately to copy. They enjoyed the highest standard of living in all of human history up to that point. The Dutch were truly the masters of the universe, controlling global trade routes and setting the terms for international commerce. And yet, over the course of just 50 years, they slowly, quietly, and methodically ceased to be a superpower. They didn't lose a catastrophic war that destroyed their homeland and killed their population. They didn't suffer from a devastating plague that wiped out entire cities. Instead, they suffered from something far more insidious and ultimately more destructive than any foreign invasion. Their elite class, the wealthy merchants, powerful bankers, and influential politicians who controlled the levers of power, realized that there was no more profitable growth to be extracted at home. They calculated that the cost of maintaining their global empire was higher than the profits it generated. So they made a cold, calculated decision that would doom their nation. They decided to export their wealth to other countries. They decided to lend their precious capital to their direct enemies and competitors. They decided to systematically and financially dismantle their own nation in order to preserve and grow their personal fortunes. In essence, they chose to exit the empire before it fell, leaving ordinary Dutch citizens to deal with the consequences. To understand what is happening to the United States today, to comprehend why the stock market hits all-time highs, while bridges rust and the middle class evaporate, we must travel back in time to Amsterdam in 1780. The parallels between then and now are not just striking, they are absolutely terrifying. The Dutch pattern is the detailed blueprint for how a hegemonic power systematically hollows itself out from within. It is the story of how a nation of productive innovators and manufacturers becomes a nation of passive speculators and financial manipulators. It is the story of how a ruling class gradually separates its own economic destiny from the destiny of the people it supposedly represents. This transformation doesn't happen overnight, and it doesn't happen by accident. It's a deliberate process driven by rational economic calculations that prioritize short-term profits over long-term national strength. The Dutch elite discovered that it was more profitable to invest in their competitors than to invest in their own country's productive capacity. Throughout the 1700s, the Amsterdam Stock Exchange transformed from a place where real businesses raised capital for productive ventures into something resembling a sophisticated casino. The Dutch financial elite invented increasingly complex financial instruments, derivatives, and futures contracts that had little connection to underlying economic reality. They created speculative bubbles in exotic assets and foreign investments. They felt richer than ever before because the numbers in their accounting ledgers were going up consistently. But while the financial economy was booming, the physical economy that had made them great was slowly rotting away like a ship left too long in harbor. The shipyards that had once produced the world's finest vessels began to close down one by one. The skilled engineers and craftsmen who had created Dutch technological superiority began to die off without training adequate replacement. The fishing fleets that had fed the nation and provided economic foundation shrank dramatically. The middle class, which had been the backbone of the Golden Age prosperity, began to fracture and decline, but the financial elite did. You won't care about these troubling developments because they had discovered a new host for their capital. They looked across the English Channel to their great rival, Great Britain, and saw a tremendous opportunity. Britain, in the 1700s, was experiencing exactly what the Dutch had experienced a century earlier. The British were hungry, aggressive, and rapidly industrializing. Britain desperately wanted to build a global empire, but they needed massive amounts of capital to fund their expansion. The Dutch elite had accumulated all the money, and they were looking for profitable places to invest it. Here lies the ultimate betrayal that defines the Dutch pattern of imperial decline. The Dutch bankers and investors began to lend massive amounts of capital directly to the British government and British corporations. They purchased British government bonds, financing the very military that would eventually challenge Dutch supremacy. They invested heavily in the British East India Company, which was the direct competitor to their own national trading interests. Most shockingly, they helped fund the very navy that would eventually blockade Dutch ports and strangle their economy during future conflicts. Why would rational, intelligent people fund their own executioner? The answer reveals the fundamental problem with financialization, because the return on investment was higher. A Dutch banker operating in this system didn't care whether the flag flying over the world, as oceans, was Dutch or British, as long as the interest payments arrived on time and in the agreed amounts. Capital, they discovered, has no fatherland. Money flows toward the highest returns regardless of national loyalty or long-term consequences. This represents what we call the Great Exit. Not a physical exit where people pack their belongings and leave the country, but a financial exit representing the migration of value itself. The Dutch elite continued living in their beautiful canal houses in Amsterdam. They continued wearing their expensive clothes and attending their elegant social gatherings. But their wealth was no longer tied to the health and prosperity of the Dutch Republic. If the Netherlands collapsed economically or politically, they would still maintain their wealth, because their assets were safely parked in London, earning 5% interest guaranteed by the British Crown. They had effectively detached their personal financial interests from their nation's success. They had built themselves a financial lifeboat while drilling holes in the bottom of the ship that carried everyone else. This separation of elite interests from national interests represents the death knell of any great power. The consequences of this betrayal became clear during the Fourth Anglo-Dutch War, from 1780 to 1784, when conflict erupted. The Dutch discovered they could barely afford to maintain their navy because so much of their capital had flowed to their enemies. The British, funded partially by Dutch investment, were able to defeat the Dutch fleet and establish permanent naval supremacy. More importantly, the war revealed that the Dutch economy had become hollow. They could no longer manufacture the ships, weapons, and supplies needed for sustained conflict because they had allowed their productive capacity to deteriorate while chasing higher financial returns abroad. Now, let's fast forward to the United States of America, where we are living through exactly the same cycle that destroyed Dutch supremacy. The timelines and patterns map perfectly onto each other with frightening precision. The United States experienced its own golden age of production from 1945 to 1970. When we truly were the workshop of the world, we manufactured the steel that built skyscrapers, the automobiles that motorized the planet, and the electronics that powered the modern age. The US dollar became king precisely because American industry was king. Just as the Dutch guilder had been dominant when Dutch productivity led the world. But then the same economic pressures that had challenged the Dutch began to emerge in America. Wages rose as workers demanded their share of prosperity. Government regulations increased to protect workers and the environment. The rest of the world began to catch up technologically and started competing with American products. Just like the Dutch elite before them, the American ruling class made the same fateful pivot. Beginning in the 1980s and accelerating through the 90s, we decided that manufacturing was dirty, old-fashioned, and beneath our status as an advanced economy. We convinced ourselves that the future belonged to services and finance rather than production. We began systematically dismantling the physical economy that had made us great. We shipped factories to China, Mexico, and Vietnam, telling American workers this would benefit them through cheaper consumer goods. But what we were really doing was following the Dutch playbook of exporting our productive capacity to potential competitors. We told ourselves we were moving up the value chain to more sophisticated work. We convinced ourselves we could maintain prosperity by becoming a nation of consultants, lawyers, and financial engineers. This was exactly the same rationalization the Dutch had used when they abandoned shipbuilding to become bankers. The results have been predictably disastrous for ordinary Americans, just as they had been for ordinary Dutch citizens. Since 1970, manufacturing employment has collapsed from over 25% of the workforce to less than 10% today. Entire regions of the country, the Rust Belt, have become economic graveyards, where abandoned factories stand as monuments to our short-sighted decisions. Meanwhile, the American elite have followed the Dutch pattern of investing their wealth abroad rather than at home. They've moved manufacturing to China, while keeping the profits for themselves. They've invested in foreign real estate markets, while American infrastructure crumbles. They've parked their wealth in offshore financial centers, while American cities struggle with debt. Here, at Economic Rewind, we've tracked how this financialization has accelerated dramatically since the 2008 financial crisis. American corporations now spend more money on stock buybacks than on research and development. They're literally returning capital to shareholders, instead of investing in future productivity, just as the Dutch had done 3 centuries earlier. The parallels extend to every aspect of our economic decline. Just as Dutch infrastructure had deteriorated while capital flowed abroad, American infrastructure is collapsing from deferred maintenance. Our power grid is unreliable, our water systems are failing, and our transportation networks are falling apart, because the money that should be fixing these systems is being extracted for financial gain. Today's America exhibits all the symptoms the Dutch experienced during their decline. We've developed a rentier class that lives off financial returns rather than productive work. Young Americans increasingly aspire to be influencers or investors rather than engineers or entrepreneurs. We want to get rich without working, preferring passive income and speculation over the hard work of building real businesses. This cultural shift reflects the economic reality that speculation now pays better than production. When building things doesn't provide good returns, people stop building. When gambling provides better returns than working, people start gambling instead. A nation of gamblers cannot compete with a nation of builders, which is why the rise of Asia has become inevitable. While Americans argue about stock valuations and cryptocurrency prices, Chinese workers are pouring concrete and laying fiber optic cables. While we trade financial derivatives, they're mining, lithium, and building solar panels. We've forgotten the fundamental lesson that destroyed the Dutch. Financial wealth represents claims on reality, but it is not reality itself. You cannot eat a government bond. You cannot live inside a stock certificate. If the underlying productive economy collapses, financial assets become worthless. But just like the Dutch elite, American elites understand this difference perfectly well, which is why they're quietly buying real assets, while ordinary Americans are distracted by financial speculation. Notice the massive buying spree of American farmland by tech billionaires like Bill Gates and others. Notice the quiet acquisition of water rights across the western states. Notice the enormous private investment in energy infrastructure and data centers. The American elite are systematically swapping paper financial claims for tangible, productive assets before the music stops, just as the Dutch elite had done centuries earlier. They're selling their exposure to the dollar to buy future resources and technology. This represents the same pattern of elite exit that doomed the Netherlands, but updated for the digital age. There is another crucial layer to the Dutch pattern that often gets overlooked: the loss of naval supremacy. The Dutch Empire had been built on their powerful navy that protected global trade routes and projected power around the world. But navies are incredibly expensive to maintain, requiring constant investment in ships, weapons, and personnel. As the Dutch economy became increasingly taxpayers began revolting against the high cost of defense spending. They demanded budget cuts and questioned why they should pay for expensive military operations that seemed to benefit mainly the merchant elite. The financialized elite, who were now investing heavily in British assets anyway, didn't fight hard to maintain Dutch military supremacy. They allowed their fleet to deteriorate and become obsolete. By the time military conflict erupted with Britain, the Dutch Navy was a ghost of its former power, unable to protect Dutch interests or maintain their empire. Currently, the US Navy serves the same function for global trade that the Dutch Navy once served. We patrol the Strait of Hormuz, the Malacca Strait, and the Red Sea, keeping international shipping lanes open for commerce. But this global responsibility is becoming financially unsustainable. We're seeing the same political pressure to cut military costs that the Dutch experienced. We're maintaining a navy that's overstretched and undermaintained, trying to cover global responsibilities with insufficient resources. Most critically, we're seeing the American commercial shipping fleet disappear entirely. How many ships flying the American flag do you actually see in ports today? Almost none. We rely almost completely on foreign-flagged vessels to move our goods, just as we rely on foreign factories to make our products. We have outsourced the logistics of our own economic survival. If a serious war breaks out in the Pacific, we lack the merchant marine capacity to support our military forces or feed our population. We've sold our ships to buy stocks, following the exact Dutch playbook that led to their downfall. So how does this story end? If we follow the Dutch script precisely, it doesn't end with an apocalypse or dramatic collapse. The Netherlands still exists today. Amsterdam remains a beautiful city with high-quality museums and tourist attractions, but it's essentially a museum of former greatness, rather than a center of global power. The Netherlands became a satellite of the British Empire, and later a minor part of the European Union structure. It lost its sovereignty and its ability to shape world history. The standard of living for ordinary Dutch people stagnated for over a century after their imperial collapse. They went from being masters of the global economy to being a pleasant but irrelevant minor province for the United States. The fall will likely be harder and more chaotic because we re a much larger country with a more violent society and deeper internal divisions. The most probable outcome is what scholars call the Brazilianization of America, a society of extreme wealth concentration at the top, living in heavily fortified enclaves, surrounded by vast areas of poverty and instability. The central government will technically remain in place, but it will be weak, constrained by debt, and incapable of solving major problems. Real power will reside in corporate networks and decentralized tech platforms rather than democratic institutions. The U.S. empire will technically exist on maps and in international law, but it will be a hollow shell with the real action having moved elsewhere. Here as where the modern situation differs from the Dutch precedent. The new center of power isn't necessarily Beijing or any other specific geographic location. Many analysts make the mistake of thinking that if America falls, China automatically wins. But the 21st century world operates differently than the 18th century. The new London isn't Shanghai, it's the cloud. The new empire isn't controlled by any specific nation. It's a digital layer that exists on top of the physical world. Capital isn't moving to any particular country. It's moving to blockchain networks, artificial intelligence systems, and private tech platforms that operate across national boundaries. The elite aren't defecting to China or any other traditional nation. They're redefecting to the internet and building a new form of civilization that exists primarily in digital space, governed by smart contracts and algorithms rather than parliaments and presidents. This is the techno-feudalism that represents the next stage of human organization. The Dutch pattern leads us directly to this outcome. When traditional nation-states become bad investments, investors build new forms of governance. They are constructing this new system right now, while leaving ordinary citizens to pay for maintaining the old, obsolete system. So what can individuals do if the ship is sinking and the captain has already taken the only lifeboat? First, you must accept a diagnosis and stop waiting for politicians to fix these structural problems. They cannot fix them because the mathematical and political incentives work against any real solutions. Second, you must adopt the mindset of the Dutch elite rather than the Dutch peasant. The peasants waited for their government to save them, and many suffered greatly. The elite saw reality clearly and diversified their assets and options. You must diversify your life across multiple systems and jurisdictions. Do not keep 100% of your wealth in US dollars or US assets. Do not place complete faith in US government institutions or pension systems. Hold assets that have global value, precious metals, crypto skills that are in demand worldwide, and relationships that transcend national boundaries. Third, and most difficult, you must detach your identity from the failing empire while maintaining your values and principles. Blind patriotism in the face of a corrupt ruling class is not a virtue. It makes you a useful fool. You can love your community and fellow citizens while recognizing that the current system has become your enemy. The Dutch pattern teaches us that empires are not murdered by foreign enemies. They are sold off piece by their own elites. The for sale sign has been hanging on the United States for decades. The transaction is nearly complete. The valuable assets have been stripped out and moved offshore. The new owners are waiting for the keys. You do not have to go down with this ship, but you must move decisively before the final collapse. Here, at Economic Rewinds, we believe that understanding these historical patterns is the first step toward navigating the transition successfully. The exit has already happened at the elite level. The visible collapse is simply the lagging indicator. History is a wheel that turns slowly, crushing those who refuse to move while carrying forward those who understand its rotation. We are at the bottom of the current turn. The Dutch lived through this cycle. The Romans experienced it. Now it is our turn to face the same historical forces. Do not be the last person to realize that the party is over. The Dutch ignored the warning signs until the economic water was already flooding over their protective dikes. You do not have to make the same mistake they made. The patterns are clear for those willing to see them. Let us begin our journey in the Dutch Golden Age, when the Netherlands represented everything that made a nation truly great. In the 1600s, the Dutch were quite literally the workshop of the world. They were unnoticed participants in the global economy. They were the innovators who created the technologies that made modern commerce possible. The Dutch invented the sawmill, revolutionizing timber processing and construction. They perfected the flightship design, which could carry significantly more cargo with fewer crew members than any other vessel in the world, giving them a massive competitive advantage in international trade. They mastered the practical application of wind energy, decades before other nations even understood its potential. Most importantly, They were a nation built on hard assets and even harder work. They imported raw materials like timber and iron from less developed regions, processed these materials using their superior technology and craftsmanship, and exported finished products like ships, machinery, and precision instruments to customers around the globe. This extraordinary productivity created a massive surplus of capital that flowed into Dutch banks and investment funds. Amsterdam became the richest city on earth for one simple reason. It was also the most productive city on earth. Every guilder in circulation represented real value created by Dutch hands and Dutch ingenuity. The Dutch guilder became the world's reserve currency not because of military threats or political decrees, but because everyone around the world genuinely wanted Dutch goods. Foreign merchants needed guilders to buy Dutch products, which created natural demand for the currency. The guilder was backed by something far more solid than government promises. It was backed by the sweat, engineering excellence, and physical dominance of the Dutch economy. But success, particularly rapid and overwhelming success, breeds a very specific type of economic cancer. As the Dutch became wealthier and more prosperous, wages naturally rose across the economy. The standard of living skyrocketed to levels that previous generations couldn't have imagined. Living and working in Amsterdam became significantly more expensive compared to rising competitors in England and France, where labor costs remained low and workers were still hungry for opportunity. The Dutch labor force gradually became accustomed to luxury and comfort. They were no longer the hungry, scrappy innovators of the previous generation who had built the empire through determination and sacrifice. Instead, they had become the comfortable, complacent inheritors of a fortune they hadn't personally earned through their own struggles. This transformation represents the crucial moment when a civilization begins to rot from within. This is where the cancer metastasizes and spreads throughout the economic system. The Dutch capital holders, the powerful merchant families who ran the Dutch East India Company and controlled the Bank of Amsterdam, looked carefully at their investment returns and saw troubling trends. They realized that the return on investment for building a new factory in the Netherlands was falling steadily. Dutch labor had become too expensive to compete with other nations. Government regulations had become too burdensome for businesses. The domestic market had become saturated with existing competitors. Growth opportunities at home were becoming increasingly limited and expensive. So they asked themselves a question that would prove fatal to their empire. Why should we go through the trouble of running actual businesses and managing difficult workers when we can simply lend money and collect interest instead? This question marked the beginning of the end. When a nation's elite starts asking why they should bother with the messy work of production when they can make money through pure financial speculation, that nation has begun its journey toward a The Dutch Republic shifted from an economy based on production to an economy based on finance. They stopped being the workshop of the world and became the banker of the world instead. This moment is typically celebrated by economists as a sign of economic sophistication and development. They call it the financialization of an economy and present it as the natural evolution of a developed nation reaching maturity. But in reality, this financialization represents the beginning of a death spiral. When an empire stops making things and starts making money from money, it has signed its own death warrant.